Hello, traders. It's 8:02 a.m. on Tuesday, the 30th of April, 2019. This is the last day of April. Bye bye, April 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market seems to be pushing into risk-off sentiment. The S&Ps are trading below yesterday's range. Kind of could see that coming when I was doing my homework last night. Um, Amazingly, the Dow, well, not amazingly, but interestingly, the Dow is still up 42 points or 0.16%. And on the other side, the Bund is down 66 ticks, even though risk is off. And so followed by the Nasdaq. The Nasdaq's down 27 and a quarter points. The Nasdaq, of course, responding to Google missing its earnings forecast, partly due to a fine from Europe, but also adding in the $1.5 billion in fines, it still missed. And then you gotta keep an eye this week on earnings, but also, for example, today after the market, we do get Apple. This morning we got GE, McDonald's, and so on. But after the market, we do get Apple today, so that's likely to be a mover for the Nasdaq and for the S&P. And then tomorrow we have the FOMC decision. So plan accordingly. It's likely to. It is a Tuesday, but it's likely to be a relatively active session early on, and then likely to slow down tomorrow morning into the FOMC, and then we're likely to get some volatility once that's done. The market's not expecting any surprises there, so I'm not sure how much of an impact we should expect from that. Looking at the calendar, this morning we've got really not much on deck. We did get some low low impact numbers. We do get Chicago PMI at 8:45 officially, or 9:45 officially, and subscribers get it at about 9:41, 9:42. That can be a mover. Excuse me. Oh, excuse me. Didn't get to muting the mic on that one. I apologize, sneezing in your ear or whatever. We get pending home sales at 10 Eastern, and then API crude stocks after the market. Let's get into review. Not fun going into a sneezing fit during the broadcast, but those of you who've been around a while know that we've been through this a couple times. 1 second. Whew, that took a while. Sorry about this. Nothing I planned. Yesterday's primary expectation is a push through the overnight high, a pullback into the prior range, and then a drive towards 29.51.50, the stock zone up there, which basically is what happened. We ended up selling off into the close, but scenario one was on point. Trading from the long side yesterday, really a balanced day. Look at that high, 51.50, right on top of the stock zone as described. This is the stock zone right here, right there. It's really 51.75, but we stopped right at 51.50 and turn around. There was a lot of liquidity at 29.50 that the market ended up taking out. It was about 2,300 or 2,400 contracts resting there, and it popped through. So it went to 50, pulled back to the IB high, and then pushed into 50.75, and then finally pushed to 51.50. The pushes up, you could tell in the order flow that they were not really following through very well. We had a very, very balanced profile throughout the session until that point. We have range extension up. It's a normal variation day. Yesterday, pretty standard day. And then we ended up falling right back into the IB with mid VWAP just above the point of control and the market closing inside of the initial balance. The S&P ended up pushing all the way back to the open, which is also the prior close. So yesterday, the open, the close were on top of each other, and then we ended up closing at 29.4250. So on a daily chart, yesterday looks like an excess high back almost into the range. So based on that and looking at what it had done for the day last night, it was clear to me that what's going on here? These belong up here. It was clear to me that the market was showing weakness. So I had at about 8:30 Central or so last night when I was doing my homework, I had told the folks at Convergent that I'm expecting around I'm predicting that the 29.34 area is likely to be low coming into today's session. Missed that by about 7 ticks or so. The low is 29.35.75, but close enough for the work that we do. And it's fairly easy to read. Now remember, I talked about 34 yesterday. This is going to be important. I mean, we're trading at 39.75. I'm expecting the market to confront some resistance on the push up, and I'm expecting it to rotate down into 34 this morning. So that's what we're looking at. So again, here's what was predicted: a push into the overnight high, pull back into the prior range, and then a push into 51.75. Here's what we got: a push, took out the overnight high, pulled back into the range, and then a push into 51.50. Sorry, missed it by a tick. And then the rotation down back to the open was not something I could predict in yesterday's trader bite, or I can plan for. So I didn't see that coming, but clearly to me it appears that the market is pretty toppy. So if we look at the overall participation and how the market is doing, we're getting very, very close to the all-time high on a roll adjusted basis. We're getting very close to the all-time high up here at 56. I bet that's difficult for many who've been, I see it on FinTwit that a lot of predictions that the market is likely to pull back for a big sell-off and we're all in trouble and all that. But we've squeezed to within 5 points of that, and that must be tough to see that. But overall, this looks like an excess at the high, and it's likely to rotate down and advertise lower prices before it continues to the all-time high eventually, most likely. You can see the spread of the 50 SMA over the 200, pretty healthy looking looking push to the upside. So now we're going to talk about what is likely to take place. A quick review of what we have on the order flow. So let's take a look at the order flow screen. Really interesting stuff last night. Look at this weird block of liquidity there from 7 p.m. Till 7 a.m. Isn't that strange? I reloaded. It looked so bizarre to me that I actually reloaded the data. Just a very odd looking block of liquidity up above that showed up overnight. But in the overnight session, we're not really seeing anything. I'm not really seeing anything spectacular. There was a move down on the manufacturing numbers out of China that caused a quick drop, and the market recovered back to the scene of the crime. The scene of the crime for that was around 29.41, and then we have pushed up into 45.50 on a quick splash at 7 a.m. my time, 8 Eastern, before coming back off. This looks very balanced to me. You look at the profile here to the left, and it's fairly balanced in the overnight session. In fact, I did not review the overnight action. I'll go back to review for that. The overnight action. Here it is. Look at this profile, just a very condensed in the middle. Pretty decent volume in the overnight session, but all of it really takes place underneath yesterday's point of control. It looks weak to me. Hope you're all following along. So again, back to the order flow, really odd behavior up above. I'm going to keep an eye on the order flow above the overnight high if we push back up there. But my expectation is that we are likely to see resistance if we push higher. So what are we looking for today to conclude our broadcast here? By the way, don't forget to watch the webinar I did last Thursday on Futures IO on the CME E-mini micros. It is linked in the description of this broadcast of this stream. It's also on the page if you're on convergenttrading.com/TraderBite or something. The TraderBite page. You'll see it at the top as an announcement block. Make sure you watch it in preparation for the release of the CME Micro E-minis this Sunday night on the open for the May 6th session. Very important product. It's not going to be easy to trade at the beginning. It's likely not to be liquid or to trade much, but I anticipate this product will be very popular and will take off. We're opening out of range so far. I'm looking for an open auction out of range that gets responsive. I'm looking for a response back into the point of control, into that 29.45.50 high. And I'm looking for an impulse down that starts pushing towards 34. I'm looking for a tangle up in 34 for a retest of yesterday's low before we start to continue down toward this 29, 29, 29, 27. That's the primary scenario. So the primary scenario is looking for responsive, giving us, now if it works out this way, this would be really excellent. It'll give us an opportunity to read how the market feels about the prior range before we can get short and target that 34 area. Again, the 34 area, bleep, 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 point of control, and more support resistance price action tests in the past. Take a look at a 15-minute. This area is really important, an important test area, and I'm expecting the market to push into it today. That's the primary scenario. Secondary scenario is that we do push away and into this 34.75 and push through, then impulse back up into the range, and then start to squeeze into the prior point of control back towards the 47 before we're confronted with some relatively tough resistance up there at the 47 area. That's the secondary scenario. The secondary scenario is initiative down and then responsive later once they find a base around predictably around 34.75, 34 even. You know, nothing's for sure. The market can do whatever, but these are the two plans, and now it's just up to us to watch which side is winning at the beginning and which side we want to trade with. We're like, think of yourself as a mercenary back in the old days, you know, when kingdoms existed. You're fighting on the side. You're fighting from the side that's paying you, that's likely to pay you best. That's basically what we're doing here. We're looking for the market to move in a certain direction and then to push from that direction. But we don't want to push, wait to put on a trade, take on the high risk of putting on a trade initially, and then take it for two ticks because we don't have a plan for what it could do or what to look for beyond. This is why we create these scenarios. Very, very important. And it's something that gets a lot of criticism. I get a lot of emails saying, why are you trying to predict the market? And they just don't get it. I'm not predicting the market. I'm simply putting a plan together for when I put the trade on, so as to have a strong hand once the trade is put on. Because the problem is not executing the trade or figuring out a bias, because you know what? It's a 50-50 chance. Your bias is long or short. I mean, geez, it's flip a coin, right? It's not the bias that's the problem. It is actually executing cleanly and then hanging on for key areas and getting paid for the risk that you take. Most people have an inverted R factor on their trades. In other words, they're risking a lot more than they're actually taking out of the trade. And that is an incredibly, incredibly hard way to make money in this business. Hopefully that helps you out. Good luck today, and I'll catch you tomorrow morning. Don't forget, FOMC tomorrow, Apple after the markets.